given the data points we have now, are you just going to power ahead and hike?
Well, I think that July is a fait accompli. It has been indicated, and it's quite clear. September will depend. What are the factors that are going to determine what happens in September? Will be our bank lending survey. That I think that is very important because it's going to be an indication of how our monetary policy is transmitted to the financial system and from the financial system to the rest of the economy, and how the tightening of financing conditions feed through to the real economy. The second will be, our projections. In September, we will have a new round of projections. And finally, the evolution of core inflation, of underlying inflation, that I think that is, very relevant in the present circumstances. So these are the three elements that we will take into consideration. But, I said that in July it was a fait accompli, or it is a fait accompli. In September, I think that is open.
Do you believe, Vice President, this is a matter of credibility for the central bank to get to 2% no matter what happens?
Well, I think that is very important. It's our mandate. It's not only, credibility is very relevant, but as well, we have a definition of price stability, and our mandate is to reach and to guarantee that price stability. So for us, is key.
What does it mean? Do you worry about stagflation, actually, in the Eurozone?
Well, I think that, perhaps, not as much as stagflation, but I think that, if you look at our projections that were released 1 month ago, we said very clearly that for growth, the risks were tilted to the downside. And I think that some of these downside risks have started to materialize and are becoming much more visible. So, this is something that we will have to revisit in September. But the data that we are receiving about growth, this data is not very good, in terms that, for instance, PMIs, soft indicators, these kind of things indicate that clearly that perhaps the slowdown of the economy is going to continue in the second half of the year.
But Vice President, this is probably why the market is also pricing in cuts, right? For 2024.
Yes, but I think that simultaneously we have to look at the evolution of inflation, and perhaps core inflation is going to be stickier than we believe. So this is a combination of factors, and because simultaneously we have a clear slowdown of the economy, even if you believe our projections, they are a little bit below 1%, with risks tilted to the downside. But simultaneously look at the evolution and the performance of the labor market. The dynamics of the labor market are really very good, are impressive, both in terms of employed people and in terms of hours worked. So I think that this is an element that could give rise to an increase in unit labor costs that could affect the evolution of core inflation.
So core inflation, is there a real concern that actually at some point in the near future you have a wage price spiral?
Well, so far that's not the case. But I think that, if you look at, because for instance, we reviewed upwards our projections for core inflation. Why? Because unit labor costs were increased. And it was not because of an acceleration of wages. It was because, a reduction of the productivity evolution. So this is a factor that we have to monitor very closely. And simultaneously, there is another question. If you look at services, clearly are outperforming manufacturing. And there is a demand for services. Tourism all over Europe is going to be is going to have a very good season this summer, and this is something that is going to have an impact on the evolution of services prices in the near future.